Howdy, folks, and welcome to the Daily Coin. My name is Rory, and today is Monday, February the 1st, 2016, and I have the great honor and distinct pleasure of welcoming back Mr. Andrew Hoffman, who is give me your title. I know it's changed, Andy.
It didn't really change. It was always marketing director, and then we said media director for a while, but same thing.
Okay.
Marketing director, Miles Franklin, 27th year of business.
Miles Franklin, 27 years in business, and you guys are AAA rated with Better Business Bureau, right?
A+ rated.
A+.
And not a single customer complaint ever.
Well, can't beat that. And speaking of Miles Franklin, I wanted to ask you about it's a three-part question, and as far as the premiums are concerned, are they holding steady? Are they rising? Are they falling? Our supplies, are they rising, falling, holding steady? And as far as volume of business, same thing, rising, falling, holding steady. Where are we at?
Well, it's been that strange dichotomy of the rest of the world versus the Western world. You know, we last had a major shortage of silver back in the late summer, and it was a doozy. It was probably because we've had shortages of silver. Obviously, 2008 was the granddaddy where we ran out of gold and silver for 2 or 3 months. And the premiums on silver shot up to close to 100%. We've also had major shortages in 2011 of silver on the way up, near $50 an ounce, and certainly in 2013, right after the alternative currency destruction raids of April 12th to 15th, right after Obama had his closed-door meeting with the two big to-fail bank heads. And then, we had this one last year, which was very, very dramatic. For several weeks, we couldn't get a hold of anything, and premiums shot up again. So since then, prices have normalized and supply has normalized. But, we're seeing a brisk increase in January, that's for sure. And I'm starting to see premiums here and there in the silver world slightly creeping up, but nothing to speak of just yet. And, with this crisis going on and getting worse, I would expect that, the next shortage is right around the corner. But as of yet, it's, again, worldwide record demand in 2014 and 2015, and the start of 2016 is at a record pace. Not to mention, you look at the inventories on the COMEX of gold and silver collapsing, the Shanghai Exchange just announcing that they're no longer going to publish how much gold is withdrawn because they're scared of there being a run on the world's gold because it's so much. And of course, just look at the U.S. Mint numbers for January, just again, spectacular. So I would expect that the Westerners are going to be joining the party pretty soon at the rate things are going.
Lewis over at smallgold.com, he sent me an email last night showing that the Mint in January sold more gold and silver than the COMEX has in inventory. Which is
I mean, what's more crazy, the level of COMEX inventory. Again, people talked about the big drop in the gold inventory a week ago, where it fell 73% in one day, and now we're hovering at about 90,000 ounces, not tons, 90,000 ounces. But on the silver on the COMEX, the registered inventory fell by 23% in one day on Thursday. And we're also down. It's down like 60% in the last year.
And did you say that it was down 23% last Thursday on that one day?
Yes.
That
day, silver inventory fell from 35 million ounces to 28 million ounces in one day. And a year ago, it was 60 million ounces.
And last Thursday was the day that we had that weird anomaly with the fix and the futures and everything being put on hold for 14 minutes. Isn't that interesting that happened all on the same day?
Yeah, my rambling on sentence that I just started with was what's more interesting, the fact that we had this big drop in the COMEX inventories, or the fact that we had this ridiculous it's not an anomaly, but the fact that they're so blatant and that in the open about fixing, and I love that word, fixing the price, 6% below the spot price instantaneously. And I sit there and I think, forgetting all else aside, you look at Occam's razor and you say, what's the most obvious, thing that was going on? Why do they even have a fix in the first place? It makes absolutely no sense. And it's only really as far as I know, gold and silver. Maybe there's some other products that they do it, but why would you need banks to sit there and tell you what price to transact gold at when you have a spot price? It's like,
Exactly.
do you go into the store and you decide, what price, you cumulatively, all the people in charge decide what prices things should be sold at that day? No,
Yeah.
that you look at the price on the store shelves, that's the price.
Right. Yeah. Those green beans, they're entirely too high. I think I'm going to knock 50 cents off a can.
Yeah, I mean, it's like again, it's frustrating for people in our world. Although, of course, all
Yes.
it's going to do is create more demand.
Right.
But in the big picture, all it's doing is exposing it more to more of the people in the world who are going to spend their money, arbitraging that anomaly by buying the physical. And again, people will do it initially, the paper investors, because they see an arbitrage opportunity, but eventually it'll be all that of fear. And on the topic of fear, I see that the supplies of junk silver are once again rapidly vanishing. And I have seen the premium slightly increase there, and that's always going to be the first sign. That's the first thing to go off the shelves. So, once you see that you can't get junk inventory anymore, you know that it's going to be coming next for the rest of the silver complex.
I mean, how are they even keeping supplies right now, Andy, with everything that's going on with the absolute voracious demand coming out of China and India and Russia as well? I
Well,
mean,
again, we had our Miles Franklin 2016 Silver Outlook webinar that we did last week with David Morgan, Chris Marchese, and Andy Scheckman. And, David put it well into perspective. He said, look, the retail demand in the world in the West is very small. I mean, it's big for us. It's dramatically higher. It's 3 or 4 times higher than it was in the 2008 crisis. And it's rapidly rising. But in the scale of overall investment demand, it's small. It's the commercial demand. The commercial bar demand, which is the much bigger aspect of the market. And, what we've seen is this explosion of retail demand while the commercial, or let's call it the institutional investment demand has been relatively flat. So, that's what's kept it from completely vanishing the supplies off the shelf. But that said, inventories have been shrinking. We've unquestionably gone into larger deficits, and whatever inventories are out there, such as what's on the COMEX, are rapidly shrinking to the point where, we are on a hair's breadth. We're on the razor's edge of supply. And honestly, gold as well. We talk about, gold, it's not as big of a deal. No, we're talking about last year, the Chinese alone purchased just about as much gold as was produced in the entire world. We also know, that supplies have been shrinking there as well. So, silver will be the first to go. But in both ends, we're sitting here looking at a global currency collapse. We're in the midst of the ECB and now the Bank of Japan going to negative rates, and the PBOC is devaluing the yuan. And we were getting ready for hyper global QE to infinity, zero negative interest rates at a point where we already have record physical gold and silver demand, and inventories are shrinking. And oh, by the way, the mining industry has been utterly devastated, and production of silver absolutely peaked last year, and gold most likely peaked last year with nowhere to go but down.
exactly. And I'm glad you brought up the QE, ZERP, and NERP, and all the other alphabet soup that these central bank criminals around the world are incorporating, because that's where I want to go next. And Yellen, as everybody knows, did that tiny interest rate rise back in December, and last Monday, I believe it was, or it was last week, Japan jumped on board with the negative interest rate policy, and the Federal Reserve here in the United States said that back in December that there was going to be more interest rate rises in 2016. Now, with the ECB and the Bank of Japan both with negative interest rate policies, how is that even going to be possible for the Federal Reserve to consider raising
Well,
interest
first
rates.
of all, the Federal Reserve never actually said there will be rate rises. They just said they suggested that that's what they would like to do. But I would like to do a lot of things that I'm not going to do. And of course, after last week's FOMC meeting, I mean, they're off the table. It's not happening. I mean, aside from the fact that money market rates are much lower than they were when the Fed announced that they were raising. I mean, the 10-year yield was 2.35 when they announced that the rate hike, and now it's 1.95, and it's going to zero, well, I'd say the rest of the world's going to zero. The rest of the world's going negative. A quarter of all the sovereign bonds in the world are at negative rates right now because they're anticipating global QE to infinity. But the fact is, last week's FOMC meeting confirmed that rates are more likely to go down than up. And of course, now that you have other central banks aggressively stepping up what I call the final currency war, it's only a matter of time before what I call the Yellen reversal arrives, when she's forced by collapsing markets and, oh, by the way, a surging dollar to eventually lower rates and give up, the ghost on her ambitions of raising rates and pretending that there's a recovery. And by the way, you mentioned that they raised their rates a tiny bit back in December, and the Japan on Friday lowered theirs. Today I wrote an article called 0.1%, because that's what the Japan did. They admitted we don't have any more bonds in stock to buy, so we're just going to go to negative rates. But all they did was lower rates by 0.1%, while the Fed went up, a quarter point, let's call it 0.2%. And the fact is, look at the carnage that was caused. Look at how devastatingly fragile the markets are, that 0.1% changes in interest rates by central banks, which are meaningless in terms of economic activity. And frankly, it's meaningless in terms of banking activity in Japan to go from 0 to negative 1.1%. Just those tiny shifts in interest rate movements cause carnage in financial markets and currency markets, in the perception of central banks, in political movements, these kind of things. It's that close to the end game, that just by the Fed going up 0.1%, they unleashed this utterly, horrible crash in financial markets. And by what Japan did the other day, we only saw 1 day's worth of it, but you're going to see the currency wars go exponential as a result, because they're pretty much saying, oh, China, you think you're going to devalue the yuan? ECB, you think you're going to devalue the euro? Guess what? We're not done yet. We will do, quote, whatever it takes with no limits to make sure that the yen does not rise. And we will destroy our public, our citizens, our dying demographic citizens in the quest to destroy the yen.
How does that even make sense?
It doesn't, right? That's the whole point. It's the whole Keynesian misguided thing about if you have a weak currency, that means that your products will be cheaper. But as it turns out in reality, if you look at Japan's record high trade deficit, and it's in recession again, and the debt to GDP has exploded, that's not what happens. What happens is it just fosters currency wars around the world. And when you do it at a time where you have an economic recession. I mean, remember, they were doing that through the 1990s and early 2000s when the rest of the world wasn't doing it yet, so they were able to skate through. But now they're doing it while everyone is in recession or depression. So all it does is make the recession worse.
Aren't we actually in a full-blown recession and possibly even a depression on a global scale?
Oh, not possibly. I mean, we in the United States may still be pretending we have a positive GDP, but we're clearly deeply in recession. But, I wrote 6 months ago, the worst global economy of our lifetimes, but that was 6 months ago. I mean, that was the good old times. I mean, the Baltic Dry Index is probably down 50% just since I wrote that article. The CRB Index, which is now at a 40-year low, is probably down 20 or 25% since I wrote that article, and so on and so forth. I mean, South Korea, which is a big, manufacturing power out in the Far East, they announced today that their January, not December, January, which ended yesterday, their exports were down 19% in 1 month. So yes, this is a global depression. It's the worst ever. There's no comparison in history to what's going on. Certainly not in the modern day world of global finance and trade. And the sad thing is, it's just getting started.
It's just getting started, and that is the sad part. I mean, we're already seeing major cracks in the economy here in the United States with, the global retail giant Walmart closing 269 stores, affecting 16,000 jobs. More than 50% of that is here in the United States, and that's just one example. I mean, there's
How
a
about Macy's? I mean, I worked on Wall Street as a sell side analyst for 8 years. I never saw a company reduce guidance dramatically 3 times in 2 months, including 2 times in 3 weeks. I mean, we're talking about major, massive declines in earnings estimates, and they're laying off people and closing stores, and that's just that's a very mainstream chain. And then of course you have Walmart, which back in October, again, October was the good old days compared to today. In October, they said we expect 2016 sales for the whole company to be no better than 2015. And that was before the financial market started to collapse. So I believe that Walmart and Macy's and pretty much everyone will have lower sales next year than they did this year. And in the retail business, where margins are razor thin, and by the way, all the profits are made during the holiday season, we're going to see massive losses and layoffs. And remember, all the layoffs, or excuse me, all the supposed jobs that came on are in these low-paying minimum wage jobs, a lot of them in retail that were brought in for the expectation of recovery that never happened. So, we have a jobs report this week. Probably won't see it in this report because it's they wait until after the new year for a lot of the layoffs. But between those and the energy layoffs and all that, and all the companies that wait until year end to do their reviews and layoff, I mean, I got to think the January report is where we start to see an utter collapse. I mean, we could start to see negative jobs numbers. I don't care how much seasonal and double seasonal adjusting the BLS puts into them. So, the one last pillar that the Fed had of pretending that we're in a recovery is going to be gone.
How do we get out of this mess, Andy? I mean,
we don't. I mean, look, for years I saw a lot of, I was saying the system has to die and crash and start all over again. But there was always plenty of people out there, some in our community, obviously some in the political world, who would say, if we just change this, we can make things better. But you know what? You don't hear that anymore. You don't hear the mainstream media talking about how great the economy is anymore, and you don't hear politicians and bankers talking about what we need to change things. Everyone knows you can't fix it. Wile E. Coyote is way out over the cliff now. He can't get back. There is nothing to do. That's what I'm trying to tell you, and I've been trying to say all along. What you can do is protect yourself from the chasm between where we are now and where we want to be one day. There is nothing to fix. There is nothing that's fixable. The only fix is going to be mass default across the entire world, every sector, from individual to corporate, municipal, sovereign.
Are you talking about a debt jubilee, or are you just talking about a complete reset globally? Does that look like a world currency?
I don't like either of those
SDR?
words. I don't like either of those words because I think they have conspiratorial connotations, and B, they don't really describe what's going on. A jubilee is kind of considered like this good thing. People will benefit. No one benefits from debt default because what you have is social unrest, draconian government, war, hyperinflation, all kinds of terrible things result from debts going away. And as for reset, again, that to me suggests that there's these powers, that these people are actually in control and are making the rules. No, they're not. They wake up, they're Keystone cops. I've been saying this every day. The IMF, the World Bank, the central banks, the presidents of the countries, they're Keystone cops. They wake up every single day saying, how can we delay, avert, kick the can a little more so we can maintain a status quo in which we're in charge? And they're failing. I mean, the Japanese, the best they could do is lower interest rates from 0 to 0.1%. And, they got a day or two of stock rally. It's probably overdue anyway, a little dead cat bounce, aided by the PPT, of course, which is, swarming around every single minute of every single day. But that's what they got. That's it. All it does is make things worse. The economy won't get better. The currency wars will get worse.
Well, I'm not sure what to say about that because I don't know what's going to happen. My crystal ball's broken, has been for all my life. I mean,
no, your crystal ball is pretty good because you're hot on the trail of what's going to happen. The only question is, it's always the same. It's the how and when. Look, for most of the world, the when is already happened. I mean,
Yes.
most of the world is already in, in 2008 or worse conditions. And parts of this country are like that right now. But, we have the reserve currency, so it hasn't been quite as bad here yet. But for most of the world, the when has started. And, when it's going to happen here at the top of the totem pole, the reserve currency issuing United States, is anyone's guess. But I've said before, I'm always the kind who says, I know it's coming soon, I just don't know when. But if you listen to what I've said in the last, I would say 2 to 3 weeks, I've said unequivocally, I don't believe there's any possibility of escaping 2016 without, as I call it, the big one commencing, if it hasn't already. I just can't see any policy response from a central bank to a government to anything that's going to stop the runaway train from falling down the hill this year.
Well, I would agree with that, Andy, completely. I mean, and I hate to say it because of how ugly it's going to get, and the potential for, like you said, war and civil unrest just completely just taking over. I mean, and people losing their mind because, as Gerald Celente says, when people have nothing left to lose, they lose it, and that's
right.
That's exactly what's going to happen.
Yeah, it's happening everywhere. Look at this migrancy crisis in Europe. It's a perfect example. Everyone's lost everything, and they're just running around looking for places to live, and the people that are living there already don't want them. And it's just one example of the kind of things you're going to see worldwide.
Yes, and as far as protecting oneself, I want to go back to gold and silver just for a minute, and then I'll let you get back to your morning. Mining collapse. We know that that whole sector is completely devastated, as you just mentioned a moment ago. We know that supplies are already somewhat limited, somewhat tight, and as you said a minute ago, the 90% silver coin, the U.S. 90% silver coin, is already showing signs of being short right now because the premiums are moving up a little bit. Now, with the mining sector in complete collapse and complete devastation, supplies tight, where are we going to get throughout 2016? Where is the new supply going to come from?
It's not coming. It's like asking, how are we going to fix it? It's here right now. Actually, most of the world, where people are dying for it because their currency are collapsing, you can't get it either because it's not sold there, or it's the governments have made restrictive rules or VAT taxes, all those kind of things. Here, you still can get it, but it can come and go. It can go in a second, like it did last July and August in the silver market here. So where's it going to come from? It's not. You can buy it today. Call us at Miles Franklin, buy it today, and tomorrow you may not be able to buy it. And you certainly are not going to be able to buy it at these prices not far down the road.
Do you think that's coming this year?
Hey, again, I don't talk about prediction of gold price, but if my belief that there's no way we escape this year without a catastrophic financial market collapse of types, of course we're going to run out of gold and silver this year, certainly silver, but again, I'm not a financial advisor. Just take it with a grain of salt. This is what I believe. I believe the financial world is going to meet its Armageddon this year. That's my belief, for what it's worth.
Well, got physical? If you don't, better get your hands on it soon, because I believe the same as you, Andy. I think that things are getting ugly. They're getting uglier by the day, and there's nothing that these guys can do about it. And it just, if you don't have gold and silver to protect yourself, then you're just going to lose. And it's just that simple. You're not going to have anything as things begin to fall apart. I would also throw in there, get some barter items.
Or junk silver.
Junk silver is, there's, get some barter items, and get your family protected. Because if you don't, I'm sorry. There's not anything that anybody's going to be able to do. So.
All right. Well, I'm going to run because this snowstorm is getting intense, and I got some things to do before it.
Okay. Well, all right. Well, we've been speaking with Andy Hoffman, Media Director, Miles Franklin. Andy, tell them how they can get in touch with you.
Right. It's ahoffman@milesfranklin.com. You can go to milesfranklin.com and read my free blog every day, or call us at 800-822-8080.
Certainly appreciate all your time. And Andy, we will talk with you soon.
Looking forward to it.
All right, buddy. Take care.
You too.
Bye bye.
Bye.